All right, welcome back to the Genius Multi-Channel. Thanks for being here. Gold forecast from BNP lower due to Fed hikes. A piece from BNP says analysts there are bearish on gold due to a stronger U.S. dollar expected as the Federal Reserve hikes rates. We'll get to that because there is a counter argument to this statement, because even though the Fed has hiked rates, real interest rates are actually lower, and we'll look at that. There's a lot of information that shows that that is actually the case, and gold investment is actually increasing at this point. Their gold forecast is an average price of US dollar $12.45 for quarter 2 of 2017, $12.20 for 2017 as a whole on average, and $11.20 for 2018. Coming up, we'll see a forecast that's pretty much the opposite of this one that we're looking at here. Oversupply won't dent gold's allure for investors this year, says an industry report. This came to us from Reuters News by Jan Harvey in London. Low interest rates are likely to drive fresh investment in gold this year, potentially pushing prices above $1,400 an ounce, despite a well-supplied market, an industry report showed on Thursday. Record high mine output and a dip in jewelry demand will help to keep the market in a surplus of 752 tons this year, consultancy Metals Focus said in its Gold Focus 2017 report. A 5% rise in physical investment equal to 49 tons of additional demand and a drop in recycling are seen trimming the overhang from last year's levels, however. Despite the surplus, with inflation picking up and only tentative increases to U.S. interest rates expected, negative real short-term rates should drive broader investor interest in gold and consequently prices, the consultancy added. This is the principal assumption behind our bullish outlook for the gold price over the rest of the year, it said. Overall, we forecast a modest 3% increase in the full year average to $12.85 an ounce. This, however, hides a far more aggressive intra-year rise to a peak that could be as high as $14.75 before the end of the year. That would be the highest gold price since mid-2013. Gold is highly sensitive to rising U.S. interest rates, which increase the opportunity cost of holding non-yielding bullion while boosting the dollar in which it is priced. Central bank purchases, which fell by a third last year, are seen easing to a 7-year low of 350 tons in 2017. On the supply side, mine output is expected to achieve a 9th straight year of increases to 3,258 tons, while recycling rates seen dropping by 7% to 1,202 tons. 2017 gold investing could see price hit $1,475. This is from Thursday. Gold investing will boost bullion prices in 2017, according to leading analysts, with the metal perhaps touching $1,475 per ounce before year's end. And here's a chart of some gold performance dating back to 2007. Oh, if only we could go back in time 10 years and be purchasing precious metals at those prices. Gold marks its 8th first quarter gain in 10 years. Gold has recorded a strong gain in the first quarter of 2017, with prices for the precious metal rising around 8%. This is the biggest quarterly gain since the first quarter of 2016, when the price rose around 16%, according to data from ICE Benchmark Administration Limited. In fact, gold prices have made positive gains in 8 of the last 10 first quarters. Adrian Ash points out several of these reasons. One of the main reasons for gold's gains is volatility hitting other assets. Real interest rates, the interest rate minus inflation, are another major factor. According to U.S. Global Investors CEO Frank Holmes, when real interest rates are negative, such as in the UK and the U.S., gold rises in that country's currency. The greater the negative interest rate, the greater the price of gold rises, he told CNBC's Squawk Box Friday. The government's only going to pay you 50 basis points for 5 years. Take away 2% inflation, you're losing 150 basis points. He suggests investors should have a 10% weighting of gold in their portfolio and rebalance once a quarter. Here's where we're going to talk more about the interest rates. And one of you, I don't know which one of you subscribers, had sent me a very interesting news article and some information that you had cut and pasted into a message to me regarding real interest rates being low. I searched all over for it this afternoon while preparing this video, and I cannot find it. Despite a recent interest rate hike from the Federal Reserve, real U.S. interest rates have fallen. Between November and February, it reached a 5-year low of minus 2.1%, according to Adrian Ash. The Fed's tough talking counts for nothing if its rates don't keep pace with inflation. That's why amongst major tradable assets, only silver has outperformed gold this quarter, gaining 13.5% since New Year's as a cheap way to play and defend against the Fed's failure to keep pace with inflation, he said. "Oh, ye paper gold trading market, how we hate you." Paper gold trading market continues to depress physical gold prices. How do you depress the physical gold prices? It's quite easy. You throw 10 trillion paper dollars at it. Not only did global paper gold trading amount reach a new record in 2016, it surpassed the previous year's total by nearly 50%. This is simply amazing when we look around at the staggering amount of insanity taking place in the financial markets. With the economic and financial markets sitting at the edge of the cliff, it would seem prudent for investors to curtail their highly leveraged bets in the paper gold casino and buckle down by purchasing real physical metal. Unfortunately, the mainstream media and the financial networks have totally lobotomized investors by removing the following vocabulary from the mushy substance between their ears: wisdom, prudent, long-term, safe haven, and gold and silver. I would include in that hedging, currency devaluation, and lessons regarding inflation or hyperinflation. This article we're talking about comes from the SR Rocco report, and we see here global gold exchange notional trading amount hit new $10 trillion record in 2016. According to GFMS newly released 2017 gold survey, total global exchange notional trading amount reached $9.8 trillion in 2016. This was up 46% from $6.7 trillion in 2015. These figures were based on the total amount of volume in nominal ton equivalent traded on 9 exchanges. For example, here are the top 4 exchanges annual gold traded quoted by GFMS. And you can see there COMEX at 179,000 tons, the SHFE 34,760, SGE 11,793, TOCOM 8,541. The total amount of paper gold trading done on the 9 exchanges in 2016 equaled 243,000 metric tons versus 180,000 metric tons the previous year. I took these values and multiplied them by the average annual gold price to arrive at the figures below. I also compared these figures to the total amount of physical gold retail investment for each year. Source: GFMS 2017 Gold Survey. As we can see, the global exchanges traded a stunning $9.8 trillion worth of paper gold last year versus $42 billion in physical gold investment. This turns out to be 233 times the amount of paper gold traded for each ounce of physical gold purchased. And you guys wonder why I have a problem with the paper gold market. Global gold exchange trading volume reached a record 7.8 billion ounces in 2016 versus 84 million ounces in 1975 when the gold futures market actually began. So there's a look at the annual gold exchange trading volume. Look at it increase. Not only was the 2016 total 7.8 billion ounces paper gold trading volume 34% higher than in 2015, it was 76 times higher than the 103 million ounces of world gold mine supply. I decided to add the paper gold trading volume during the 1970s when the gold futures markets began. During the first year of gold futures trading in 1975, a total of 84 million ounces were traded. However, by the end of the decade, and as the gold price shot up towards $850 per ounce, total paper gold trading surpassed 1 billion ounces in 1979. Oh, how I await the day where we can sit back and watch the entire paper trading market of precious metals come crumbling down and blow over like the house of straw, the house of paper, the house of cards that it actually is. It'll come toppling down. We just have to give it time. If you give them enough rope, they always hang themselves, and they will do so. And this leads me to something I haven't really ever done on this channel before. And I have my reasons for not addressing the topic I'm about to cover. Anyone who sits on YouTube long enough will notice there's a fair amount of trolling that takes place, or people that like to go around and stir the pot, stir things up, create some negativity. Well, my channel gets a fair share of that because some of the topics that I do cover touch on sensitive and controversial areas, and there's always people that would like to engage in a little bit more heated discussion than I tend to wish to spend time in the comment section doing. Normally, I tend to ignore these types of comments, or I'll reply to them politely and sometimes even have to be forced to delete them based on the severity of their rudeness. I received one earlier today from a gentleman that goes by the name Silver Goldman, who wanted to inform me that he will not be following me, and that's quite fine. I never asked him to. However, he went further and wanted to inform me that I was a fearmonger like Alex Jones and many of these others, and that I was using scary music at the beginning of a video to frighten people. And he was telling me that I promote metals and that I'm a scammer or a fraudster and I pump precious metals. Somehow as if alluding to the fact that I might make a profit from them, or I myself am a silver and gold dealer, which, as I have told you guys, and you are fully aware, I'm not, and is not the case. Any of you that are familiar with my channel know my backstory well enough, and if you want, you can read the bio I wrote up for Metals Mafia on it. My passion for precious metals comes out of life experience in witnessing losses in other areas, as well as my firm understanding of history, economics, and the course our nation has been on and is currently on. So I replied to this gentleman that he didn't have to be part of my channel. I don't need him on my channel. I wanted to know more about this Silver Goldman, so I went and explored his channel just briefly, and I looked into him, and of course he's one of those people that likes the paper markets. He likes to trade miners, stocks, and so on, and he's really into the technical charts and prognosticating and soothsaying based on averages and moving averages and all of the little science behind ups and downs in charts. But then I went to his list of people that he hates, or people that he accuses of being scammers and fraudsters, and I realized there's a long list of them, but some of them are quite famous. There were some big sites like Russian Television RT, Max Kaiser, Alex Jones, Mark Dice, Joe Rogan, and then, lo and behold, there's Salivate Metal. This guy put Salivate Metal in the list of people he doesn't like as a pusher of silver, a fraudster. And Big Stack McGee and Silverfish VT. I was like, these are my peeps. So he needs to put me in there. I'm not yet in his list of fraudsters, but I'm assuming I'm on my way there because I did reply to him. I would love to be listed amongst such infamous individuals, and I could only count it as an honor to be listed somewhere near Salivate Metal and Silverfish VT and Big Stack McGee. So please, if you're watching this, Mr. SpongeBob SquarePants Gold Silver Man, you booger-eating denizen, please put me with these individuals. I would appreciate it. All right. Thank you for being part of the Junius Maltby channel, all of you. Have a great day. Don't forget to stop by and watch the video of me lighting up $2,700 cash on fire. It's money.